Thank you for joining this webinar about self-assessment, budgeting and payments. Before we start today's webinar, I'll just mention our other webinars in the series to help you with your self-assessment tax return. They are New to Self-Assessment and Introduction, Starting Your Online Tax Return, the Employment section of your online tax return, and the Self-Employment section of your online tax return. The UK Property section of your online tax return, other income and tax reliefs on your online tax return, finishing your online tax return, and your self-assessment calculation and payments. You can join these live webinars where you can ask questions or watch a recording of the webinar, which you'll find on our help and support pages after it's been delivered live. During today's webinar, we'll be looking at budgeting for your self-assessment tax bill, how to pay your self-assessment tax bill, the budget payment plan, record keeping, and the HMRC app, business and personal tax accounts. We'll also be covering how to deal with problems with the online services, amending your tax return, hints and tips, and basis period reform. Just before we get started, here's a quick reminder about what we mean by self-assessment. Self-assessment is a system HM Revenue and Customs, or HMRC, uses to collect income tax. For many people, tax is usually deducted automatically from their wages and pensions under pay-as-you-earn, or PAYE. People and businesses that have other income, however, may need to report it in a tax return. For the remainder of the webinar, we shall be referring to self-assessment as SA. Let's start by looking at budgeting for your SA tax bill. When you're new to SA, it's a good idea to budget for your tax bill. Budgeting for your tax bill can help you pay what you owe on time and avoid any fines. The payment deadline date is the 31st of January following the end of the tax year. You can file your return any time from the 6th of April after the tax year end for which you are sending a tax return. For example, if you're sending your tax return for the 2023 to 2024 tax year, you can submit your completed tax return anytime from the 6th of April 2024 onwards. By sending us your tax return early, we'll be able to tell you how much tax you owe. This allows you time to put some money aside towards your tax bill. You can also use our tool on gov.uk to estimate what your tax bill might be. Enter all your estimated income to get an idea of how much income tax and, if due, Class 4 national insurance you'll need to pay. The tool assumes you get the standard personal allowance. You should include all types of income when using it, but there are some scenarios the tool doesn't cover. Please read the guidance before starting. Paying on time means you'll avoid being charged interest and a late penalty. The date for paying any tax that you may have to pay is by midnight on the 31st of January in the current tax year. This date applies to both paper and online returns. For example, any tax you may owe for the tax year ending the 5th of April 2024 will need to be paid by midnight on the 31st of January 2025. As well as your payment for the tax year, your tax calculation may also show something called a payment on account. Not everybody has to make payments on account. Payments on account are advance payments towards the tax bill for the following tax year. If you do, you make two payments on account. One by midnight on the 31st of January before the end of the current tax year, and another by midnight on the 31st of July after the current tax year has ended. For example, for the tax year ending the 5th of April 2024, you'll pay any tax due by midnight on the 31st of January 2025. First payment on account by midnight 31st of January 2025, and second payment on account by midnight on the 31st of July 2025. You can find more information about payments on account on gov.uk. For your payment to reach us the same or next day, you can pay by approving your payment through your online bank account, online or telephone banking using faster payments, CHAPS, or your debit or corporate credit card online. You can also use a paying in slip from HMRC at your bank or building society. For payment to reach us within 3 days, pay by direct debit or BACS. Alternatively, you can send a cheque through the post. You can also pay your self-assessment tax bill through the HMRC app. And more about this in a moment. To check we've received your payment, you can view details via your HMRC online account. It should show as paid within 7 working days. Remember, we have other webinars in this series which go into more detail for you, including your self-assessment calculation and payments. We also have a short video available on HMRC's YouTube channel. HMRC understands that you may not be able to pay your tax bill on time. You must contact HMRC as soon as possible if you have missed a deadline or know you won't be able to pay on time. You may be able to set up a payment plan called a time to pay arrangement. This allows you to pay in instalments, taking into consideration your personal circumstances. A time to pay arrangement will only be agreed if HMRC consider you'll be able to keep up with the repayments. Here's a brief explanation of what is meant by entering into a budget payment plan. For future reference, provided you're up to date with previous self-assessment payments, you can set up a budget payment plan which allows you to make regular monthly or weekly payments towards your tax bill. You can choose how much you want to pay and how often, and even pause payments for up to 6 months if you want to. These payments will show on your statement of account, but not in your tax calculation. Your statement will update 3 days after you've submitted your tax return. You'll also be able to see any balance due in the HMRC app. You'll need to keep records to be able to complete your tax return correctly. There are no rules on how you must keep records. They can be kept on paper, digitally, for example, a spreadsheet, or on bookkeeping software. If you send us your tax return on or before the deadline, you must keep your records for at least 22 months after the end of the tax year that the tax return is for. If, however, you send us your tax return after the deadline, you should keep your records for at least 15 months after you sent the tax return. If you're self-employed, you'll need to keep your records for 5 years following the deadline for filing your tax return. You'll need to keep documents about your pay and tax, including your P45, if you left your job during the tax year your tax return is for. This will provide pay and tax details to the date of leaving. Your P60 if you are still employed on the 5th of April of the tax year you're sending your tax return for. This provides pay and tax details for the tax year. Form P11D, which provides details of any expenses and benefits, such as a company car or medical insurance. Information about any redundancy or termination payments you've received. Tips received and any lump sums not included on your P60 or P45. If you're self-employed, you'll need to keep records of all sales and income, all business expenses, VAT records if you're registered for VAT, PAYE records if you employ people, records about your personal income, and your grants if you claimed through the Self-Employment Income Support Scheme. For savings and investments, you should keep, for example, bank and building society statements and passbooks, statements of interest and income from your savings and investments, bank tax deduction certificates and UK dividend vouchers, chargeable event certificates showing profits made from life insurance policies, state pension details, and forms P60 from your pension provider. If you're in receipt of rental income, you should keep details of the dates when you let out your property, rent received, any income from services you give to tenants, for example, if you charge for maintenance or repairs, rent books, receipts, invoices and bank statements, and allowable expenses you pay to run your property, for example, services such as cleaning or gardening. If you receive overseas income or have any capital gains or losses, please go to gov.uk for information of records you should keep. We also have live and recorded webinars, as well as useful YouTube videos to help you with record keeping. Here's some information about our app and the business and personal tax accounts. If you haven't already downloaded the HMRC app onto a mobile device, here's several good reasons why you should do it straight away. Here are a few examples of what the app can be used for. Your tax code, national insurance number, and your unique taxpayer reference UTR for self-assessment. Your income and benefits such as child benefit and state pension. Report tax credit changes. Complete your renewal, see how much you receive and payment dates. How much self-assessment tax you owe and make a payment. Access your Help to Save account. Use our tax calculator to work out your take-home pay after tax and NI. Claim a refund if you've paid too much tax. Update your postal address and more. Your business tax account, or BTA, can be used by sole traders, partnerships and limited companies to get details of their tax positions. This could be for self-assessment, PAYE, VAT, corporation tax, over 40 other business taxes. Individuals can use their personal tax account or PTA to check records and manage their details with HMRC. We've included some of the things you can do using your PTA on the slide for you. As you can see, the actions you can perform on both the PTA and the BTA are very similar to the HMRC app. You can get help with signing into HMRC's online services if you're having problems. If you've forgotten the user ID or password you used to sign in, you can recover your user ID, reset your password, recover your user ID and password. Simply follow the links on gov.uk to restore your details. You may need to enter a 12-digit activation code when you first start using our online service. If needed, you'll be told about this at the point you register. If you need a new activation code, you'll need to sign into HMRC online services using your government gateway credentials. Select services you can add, select request a new activation code and enroll for the service again. If you enter your user ID and password incorrectly 5 times, you'll be locked out of your account. Your account will unlock automatically after 2 hours and can't be unlocked by help desk advisors. You can ask HMRC's digital assistants for help with using HMRC online services. If the digital assistant can't help, you can ask to be transferred to a web chat with an HMRC advisor if they're available. Now let's look at amending your tax return. If you realise you've made a mistake or maybe forgotten to include something after you've submitted your tax return, don't panic. You can correct a return within 12 months of the self-assessment deadline. You can amend your online return by following the step-by-step guide on gov.uk. If you originally sent us a paper return, simply send another paper return with amendment written on each page. If you miss the 12-month deadline, you'll need to write to us within 4 years following the end of the tax year to which the tax return relates. Just to remind you, this may affect the amount of tax you have to pay or the amount we have to refund too. So please make sure you check your calculation. Finally, here's a few tips you can take away with you. These are just a few suggestions to help you with self-assessment. Set up a good record keeping system as soon as possible and keep it up to date. Maybe look at keeping records digitally by setting up a text or spreadsheet document. If you're self-employed, make sure you're claiming all your business expenses and keep track of them. Make sure you're claiming the correct tax reliefs. Make sure you have everything you need to complete your tax return before you start. Don't delay sending us your tax return, as this could lead to unnecessary interest and possible penalties. Don't wait until the deadline to send us your tax return. Start early and, if you can, file online. Filing online means you can track your progress, and you can even do it in stages by saving as you go. You'll also find out if you need to pay tax or are due a repayment. Tailor your return, as this will save you time in the long run. Try to budget in advance. Finally, and more importantly, don't be afraid to ask for help. There are lots of ways HMRC can help you. Please take some time to explore the range of support we offer to help you get things right first time. Finally, here's some information about changes to basis periods. This only applies to you if you're self-employed or in a trading partnership. This change doesn't affect employees or limited companies. From 2024 to 2025, all unincorporated businesses will have to move to the new tax year basis. Prior to this, businesses could make their accounts up to any date in the tax year, for example, the 1st of June to the 31st of May. The move to the new tax year basis will make it easier to match trading income and to align the tax liability to the tax years. From 2023 to 2024 onwards, it will be easier to prepare your accounts up to the end of the tax year, 5th of April. This means your accounting year will start on the 6th of April and end on the 5th of April, in line with the tax year dates. If, however, you started trading after the 6th of April, your first accounting period will be from the date you started self-employment to the 5th of April. For more information about basis period reform, please visit gov.uk. I'll just remind you about our other webinars in the series. They are New to Self-Assessment and Introduction, Starting Your Online Tax Return, the Employment section of your online tax return, the Self-Employment section of your online tax return, the UK Property section of your online tax return, other income and tax reliefs on your online tax return, finishing your online tax return, and your self-assessment calculation and payments. You can find more information on our HMRC email updates, videos and webinars for self-assessment page on gov.uk. We're nearly at the end of the webinar now. Here's a summary of what we've covered today. In today's webinar, we've looked at budgeting for your self-assessment tax bill, how to pay your self-assessment tax bill, the budget payment plan, record keeping, and the HMRC app, business and personal tax accounts. We also covered how to deal with problems with the online services, amending your tax return, hints and tips, and basis period reform. Our full range of help and guidance can be viewed online from your mobile, tablet, or PC at any time. Thank you for watching, and goodbye.